Fear and loathing on Wall Street. Hi, Dean Jenkins with FollowMeTrades.com, and I'm recording this update on Easter weekend, March 31st, 2018. And if you and your family celebrate Easter, then I certainly wish you a happy Easter. I start off by saying fear and loathing on Wall Street because it's well known that investors loathe. They do not like uncertainty, and we seem to have a tremendous amount of uncertainty, more than is usual in the markets right now. And there's a pretty good degree of fear as well. I'm showing the CNN Money Fear and Greed Index, and you can see it's nearly pegged at extreme fear, and it has been for like a month. So it's there's quite a bit of fear. This is an interesting indicator. I don't trade based on it, but it's interesting. It's a good backdrop that maybe would draw my attention to particular things in the market. And CNN Money, they're pretty clear about the. I think there's 7 or 8 things seven things they track to come up with this fear and greed index. So nearly got the meter pegged here at fear. As I was preparing this update and thinking about the theme of fear and loathing, I thought about what bad news are people worried about, the people in the market, the participants, and potentially what good news could there be coming. So several major issues have been resolved and questions are answered. The tax cut legislation is done. The Fed has made their latest announcement and really clear about where interest rates are going, their plans for the year. Budget passed Congress and was signed into law, so there's no government shutdown pending. So those things are all off the table. And so it's more situational events and geopolitical events that people are worried about. And what good news could be coming? Maybe Iran or North Korea would announce that they're going to abandon their nuclear ambitions. Maybe Vladimir Putin would apologize for some bad behavior and send his embassy staff back out around the world and invite other countries to bring his embassy folks back. Maybe the White House would back down on its protectionist trade policies, or any other number of things. I say that kind of tongue-in-cheek because the probability of any of those things happening is very small, I guess would be a good way to put it. Very small. The potential, on the other hand, for bad news, for escalation in tensions in a variety of areas, the chance of that happening is actually pretty good. So I'm not an alarmist. I'm not an apocalyptic person. But I'm just trying to take a realistic look around and say, what good news could move the market, what bad news could move the market. And I have a hard time coming up with good news. Now, we do have earnings season kicking off with Alcoa, bellwether company that really is viewed as the beginning of the Q2 earnings season on April 18th. So that's nearly 3 weeks away. So maybe corporate earnings would be a catalyst for some enthusiasm. We'll have to wait and see. Some of the early companies reporting are showing unintended hits, at least short term, based on the new tax law, and maybe we'll see more of that coming. We'll have to wait for that reality to play out. Well, that's the backdrop. Let's go ahead and take a look at the chart and talk more about the reality of what's actually happening. I got the S&P 500 daily chart up, and of course you are aware that there's been quite a bit of volatility as of late. What's interesting is the early February, the S&P 500 pulled right down to the 200 simple moving average, rebounded up a bit, came back down and found support right at it. And now, over the last week, we had some volatility, but really it's without direction. And what I want to bring your attention to is this pattern here, which is known. Hopefully you can see that line okay, and this line here. So this pattern is known as a wedge or a flag or a pennant, where price is compressing into a narrow price range. Typically when we see this price, this is actually showing, it looks like it is decreased volatility, decreased tension, but it actually is the building up of tension, kind of like a coiled spring, and it will break out of this one direction or the other, and that could give us an indication of where the market's going to go after that. We have this same pattern forming on a larger scale, and here you can see it. So we've got basically a pennant within a pennant. You can see it kind of here. So whichever way it breaks is probably where it's going to go. And if it breaks down through the 200 simple moving average, then I think we've got a larger correction on our hands. That's just based on a technical analysis. And we would then shift to a weekly chart and start looking at some targets pretty far down for the S&P 500, and those would translate to other indexes as well. So we got to wait and see how it plays out. Again, as I laid out, I think the probability of bad news that the market would respond to, at least in the short term, kind of outweighs the possibility or probability of good news. So I'm biased to the downside. We've got some trades taking on individual charts, long and short, but I'm watching closely to see this happen, and if so, we'll be taking a lot more trades to the downside or going long on instruments that are typically viewed as a flight to quality, gold and some other stuff, if the setups, the technical setups are there. Typically with uncertainty, we would see some strength in gold, and we're not yet. So that's, a bit of sand in the works from what we would expect to see. But the market, doesn't do what we want it to do or expect it to do. It does what it's actually doing. So we're holding off on any trades on gold until we see some strength build. And if it does, it could happen pretty quickly, and there could be some good opportunity there. Oil is still pretty bullish. It looks right now like we've had a big impulsive move through last year. We had a correction here, and it's starting to work its way up with higher highs, higher lows, new highs. Pulling back currently, but it may head up again, and if so, we have a target zone between 70 and 77. So we'll be looking for trades in that as well. So, a bit of uncertainty looking at key levels in the S&P 500. Gold's not ready yet. Oil maybe soon. Have to see how things play out and be ready. Again, I think it will be breaking news that drives the market more than anything that is planned, because everything that was planned has pretty well been resolved in terms of major issues like tax cuts, the Fed position, the United States budget, all these kind of things. And we may have to wait. If there's no breaking news and things go quiet for a few weeks, then corporate earnings could be the next big catalyst for the market. So we'll be paying close attention and providing updates as things happen. As always, love to hear your comments, your feedback. So post them here on the blog page, and I'll respond to everyone. Thanks. Bye.